Good evening, all. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for Monday, the 23rd of May, 2022, 5:35 p.m. Central Time. Remember, a week from today, we're not going to be here, Memorial Day. And with that in mind, you got to start watching gasoline, heating oil. Why heating oil and natural gas? What's going on there? Let me start off with that. The Biden administration is considering releasing up to 1 million barrels of heating oil on the market to lower the heating oil price. Gasoline, they're back on the table talking of removing the federal excise tax. They're talking of some EPA waivers to make bio blends. So there's going to be more product is what you got to keep your eye on, okay? But then you get the holiday demand, and this is the kickoff of a season. So it's unlike other holidays where it comes and then it's gone. Once you get into the summer months, people start driving, and they'll do that as weather allows. So it's going to be an interesting demand season for the market, and one where we got a very tight balance. Saudi Arabia was talking about that today, the head of Aramco, and saying how the U.S. hasn't made the right investments. He's correct on that. And that if we're not careful, what may happen is you have such a tight market, people can go back to using coal for energy purposes. And that's happened in China already. We've seen that. So you've got to be very careful. He is on the right track with that. Jet fuel, he brought that up. He said, you do realize that what you think is excess spare capacity around the world isn't quite there. It takes nothing to make this market get beyond super tight. We're seeing that in every day. You had a huge update today in the stock indices. They're falling in the early evening. Now, it's a mixture. Snap was down, some 22% they missed, but I saw Zoom's earnings were better. I'm a little fearful this week of the retailers coming out. We have Macy's, Best Buy, Costco. You got the big boys coming out here. Are they going to follow what we've already seen? Well, that'll weigh on these markets. So something to keep in the back of your mind. While we had a rally in the metals, it's not a stellar rally. You came away from the 1800 level in gold back to 1850. Pretty soon I'll be leaving the June gold and moving to the August, by the way. Copper's still one of my favorites. It's back into the 430s. This is a market down into the 410 area recently. And as long as China continues with its plan of gradually opening up their economy, this should do fine. If there's a setback, this will be the market that tells you that, and it'll get hit. You'll wonder what the heck's happening. In bonds and notes, the market's just sort of walking a fine line, waiting for the FOMC minutes to come out this week. So when we look at the gold chart, you can see how you had fallen back on a weekly chart well under the 18-week average of closes. That's a resistance point on rallies. But from here, that's a rather big number. You got to go up $43 to get there. That won't be easy. You can see how the market has gotten its first serious bounce. And in the process, it established higher lows, higher highs. That's bullish. So you always ask yourself, that rally, where did it come in relation to the 18-day average of closes, what I call the line in the sand? And it happened right up into it. Take a look. Let me just back away from, I'm sorry, I can't do that. As you can see, it rallied into it, closed under it today. It's just playing at that number. So I call this a contra-trend rally. Why? Markets that get a rally under the 18-day average often try to get back to that number, and from there, it decides what's it going to do. Speaking of that, the Bollinger Band, way up at 1902 is resistance, the 100-day average at 1888.70, and support 1849.50, about where you're trading in the 18-day average, and the slow stochastic momentum up. So the bulls, for the first time in a while, I'm saying, have control. Whether they can maintain it because it's the first day they've grabbed it, the first evening, I don't know. Any moves back under 1849.50 means it's wavering on them. I will call this area an area of interest, period. The gold-silver ratio still hasn't been able to see silver swing back under the red 18-day moving average of differences. just nothing there that's still going to favor the gold market. And in silver, like the gold, I doubt that I'll be able to move that, and I can't. You have higher lows, higher highs, and you can see how the market just sort of locked in right there. Went like the gold to the 18-day average, ran into a brick wall. So what about copper? Well, copper's done way better. Copper got up to these numbers middle of last week, end of it actually, Thursday. Then we had Friday, Monday, and this is the Tuesday trade. We're already getting into somewhat overbought area. You've got a 68 reading. Anything over 70 is overbought on the slow stochastics. You're not there. You've come up a long way under the $4 level right there. So I was saying the 410, but it's really under $4 if you look at it. But I was also looking at the May contract that, you know, as you roll the contracts in your brain, they're different. I still like the market. It can pull back and have to consolidate this a bit. Wouldn't surprise me. And to buy it here, you've got too big of a risk. Let's assume you put a stop under the most recent low. Do you really want to risk 20 cents? $5,000 on a futures contract? Forget it. So it's fun to look at, not fun to trade. In the platinum, you are just whipping around the 18-day average of closes. Focus on this red line, and you see what the market is doing. You're over, under, going nowhere real fast. What we need to, in order for a trend to develop out of this are for the Bollinger Bands to narrow in, and they have not begun the process. You've gone flat in momentum, but you haven't taken the math part of this of the Bollinger Bands and compressed it yet. Once that begins, then I'll get excited about a potential trade. And in the Palladium market, you're still very much in a downtrend, lower highs, lower lows, or is it lower lows? It's a problem. You have that, then you had an outside day down. Now here I'm going to be able to show it. Don't ask me why, but that's it. When you take out the high of an outside day down within 2 sessions, if you do it like you did, the odds favor you're going to make a run to the closest moving average or the Bollinger Band. The closest of it would be the 18-day average. But that becomes a failure too if you take out that day's low again, which would be the 19, what is the low that we're looking at right here? That would be the 1913 level. So if you take out 1913, I'm wrong on my thinking. Otherwise, I am expecting price to lift up to the 18-day average, and we'll see what the market does from that. Next, in the dollar index, we have been watching a market that has been slowly moving itself back down, and it has done all it had to do. It's down to the lower Bollinger Band. It's oversold in the process. I think the pros are covering their shorts, walking away for the time being. I don't know that you want to get bearish long-term on the market, but the short-term, once you lost the embedded reading, just completely fell apart. And that is what you look at. The flip-flop of that happened in the euro. So, you know, we're seeing a lot of interest again as I brought back some of my video series that I'd done a while ago on pivot points and now the Maroon Indicator. The Maroon Indicator is all about timing of this. The market's in an uptrend. Is each time it's going, is the timing of that in terms of time and price validating each other? That's what you want to know. And sometimes these indicators give you a head start against it, like slow stochastics often turn before price. Well, this gives you an idea that innately the market is not making the same breadth of move that it had been. You see it on the charts, but the breadth of the move isn't there. That's what this indicator in part measures. How do you get it from us? It's a video series. It's free. Just go to our website under free offers or put your cursor up here. Click the icon when you see it and take it from there. I'm Ira Epstein. You have a great day, and I'll see you tomorrow.